What's going on, guys? Welcome back to another video. We just had an absolutely wild day in the market with all of these Chinese stocks absolutely printing for us here. But we did receive some very important economic data that I think the market at this time is discounting. That really could lead to the market having significant problems in the near future. Now, when I make these videos for you guys, I don't want you to think, oh, we need to sell everything and then, oh, the market's going to collapse tomorrow. That's not what this is. What I really aim to do is be the voice of reason in the market and outline the risks that everybody is just not seeing, because they are very important into understanding when we're trading, especially to maybe take our foot off the gas, maybe when it's time to start raising some cash in our long-term portfolios when these different signals start to occur. So also, guys, I do want to give a brief shout out to the Discord over here. Oh my God, what an absolutely insane day that we just had. Over 900% on the Pinduoduo trade. That was directly from the weekly watch list that we entered on the private live stream on Monday. We had so many of you guys making some insane gains. We also were able to get out of the free Tesla positions for about 170%. I also was able to nail that Nvidia trade that I actually outlined for you guys for free on my Twitter account and in the broadcast channel on my Instagram. Guys, that 2 weeks free to the Discord community, that promo offer that I am offering all of you guys is coming to an end very soon. If you guys are interested in getting all of the weekly watch lists, the private live streams, both educational courses, the macro research reports, the pre-market plans, the single stock research reports. Again, there's a lot in there. And when I tell you guys that there is really only one place to go if you guys really want to have long-term success in the market, I mean, I'm showing you guys every single day. It is absolutely awesome seeing all of your guys' success. And I can't wait to help all of you new members starting to have that success that you deserve as well. So again, link down below if you guys are interested, but let's get into it over here. So what was the piece of economic data that came out today that I deemed was incredibly important for the broad market? Well, that's going to be consumer confidence. When this data report dropped right around this 10 a.m. time, we saw a very aggressive move down in the market. Now, why is that? Well, September consumer confidence falls the most in 3 years. The Conference Board's Consumer Confidence Index slid to 98.7, down from 105.6 in August, the biggest one-month decline since August of 2021. Now, respondents' concerns focus mostly on jobs and inflation, and this is really, really, really important. When we scroll down a little bit here, we have talked about this a couple of times in the past, but on inflation, the 12-month outlook rose to 5.2%, with concerns over price increases topping the list of economic concerns. The proportion of consumers anticipating a recession over the next 12 months remained low, but there was a slight uptick in the percentage of consumers believing the economy was already in a recession. Now, we talked briefly, I believe it was last week, about the 3-year inflation expectations ticking to the upside and how this can lead to a very vicious self-fulfilling prophecy in the overall broad market. Now, what does this actually entail? Well, and again, we're going to go over a different reason why we could see inflation starting to move back to the upside, but let's just think about broadly what we've seen over the last 2 weeks. The Federal Reserve cut rates by 50 basis points. When you cut rates, that can be seen as leading to more inflation. Is that likely after the first 50 basis points of cuts while we're still at a really high target federal funds rate range? Not necessarily. But when you have everybody, or let's just think about it like this. If everyday people in a society think that prices of goods and services are going to increase over X amount of time, 3 years, 12 months, well, then there's specific actions that they are going to take because they expect certain conditions to be different in the future. Now, I'll give you guys a minute here to kind of briefly think about this, but what do you think somebody that is employed and also thinks that inflation is going to be coming up in the near future? Now, I'll give you a minute here. Comment down below what your thoughts are. Also, if you guys do enjoy these videos, make sure you guys drop a like on this video as well. It helps me get this information out to as many people who actually want to learn about all of these different things happening in the market. So, what do you guys think? I'll give you another couple of seconds here, and I'll tell you. So, What those people will do is they will request higher wages from their employer. Now, the employer has a couple of interesting decisions here. Well, it depends on if they're unionized or not, but the employer can decide to pay those higher wages. Now, if they want to keep their same margins and their same levels of profitability, what do they have to do? Well, they then have to go out and increase the prices of those goods and services, and that's inflationary. So that's where one of those self-fulfilling prophecies comes in. The second is they don't pay those wages. The workers don't come back to work. Maybe they quit and try to find a job elsewhere. Unemployment maybe would start to move to the upside. Overall growth would come down, leading to a recession. So this is why inflation expectations are so important, because if everybody thinks something is going to happen, well, they can then cause other adverse outcomes to happen in a market. Now, what we also have to think about is, well, are people requesting higher wages at this current time? That is the question that we now have to ask. 12-month inflation expectations are coming up. Same thing with 3-year inflation expectations. And we are seeing those higher wages be requested. Over here, Boeing offers union 30% wage hike annual bonus in a bid to end strike. That is very important. So one of the unions got together and said, well, Boeing, we're not going to be working for you anymore. You can see this machinist union on strike against Boeing requesting higher wages. Now we come over here. This is another very important one. Thousands of Bay Area hotel workers go on strike as contract talks stall. So we're starting to see the initial elements of this right now, and this is going to be critically important because, and I'll lead you guys into a little TLT conversation here before we talk a little bit about what some of the other elements are that can drive inflationary pressures in the market. Now, this is actually a very strange move out of Treasury yields today. Now, here is kind of my analysis of what's happening in the bond market. If consumer confidence is relatively low about the economy and they're already thinking that we're in a recession, I can see, I don't want to call it the normie argument, but that's effectively what this is that, since a lot of people think that we're already in recession, the consumer confidence is really low, well, then we need more rate cuts and we're going to price that into the bond market. Now, is that necessarily what we need to do? Not necessarily, because we have to think about what's more important. People thinking that economic conditions aren't great, or that inflation is going to start roaring back to the upside and making decisions based on that. To me, the market is discounting the fact that people think that inflation is going to start moving back to the upside, and that's why we're seeing this reflected in the bond market. Now, which is probably going to happen at some point over the next 6 months, the narrative flips to re-inflation, we would see bond yields trend higher, but that doesn't necessarily mean that we are going to stop lowering interest rates as a whole and go the other way. And that's actually going to be the time to go long TLT or TMF. So more on that later in some other videos. But let's talk a little bit about some of these other different catalysts for this reinflation risk. The dollar. If the dollar is going to weaken significantly here, that is definitely a sign that inflation could be roaring back to the upside. Why? We could start to see commodities get a lot more expensive, especially kind of what's happening out of China, the situation with USD JPY and the Japanese yen right now. But when we look at oil right now, let's take a look at CL. I haven't looked at this today, but I would assume it's doing well off of these lows. And it is. We start to see oil making this move back to the upside from this 65 area up to 71. Now, for those of you guys that don't understand why oil is so important to inflation, oil is in everything. It's in production of goods and services. It's in transportation. If those types of costs start to go up, the costs are effectively in the units of production of a lot of these goods and services, and it makes them more expensive to sell, which means that these different distributors of these goods and services need to charge a little bit more. Are we at that point yet? No, but we could get there if oil starts to move back to the upside and we see that continued weakness of the US dollar. So that's really the main point here, ladies and gentlemen, is that inflation expectations, those pieces of data are going to be incredibly important over the next 6 months here. Now, we do have PCE coming out on Friday, and that could easily show us that inflation is starting to move to the downside. But as we have seen many, many times in the past, the data that we receive is very disjointed to what people are actually feeling and doing in the economy on a day-to-day basis. So, again, you could see some short-term relief well, I don't really want to call it relief, but a short-term move in the market based off of that data coming out on Friday. But and I want all of you guys to be this well-rounded, well-informed market participants, we have to understand that inflation expectations have a high likelihood of driving rate cut expectations and also the market over the next really 6 months to a year. So that's going to wrap it up for this one, guys. Again, if you did enjoy the information and analysis I provided for you guys in this video here, make sure you go down, drop a like on this video. And again, if you guys want to start taking trades like I just showed you guys at the beginning of this video here, make sure you guys check out that link down below. 2 weeks free to the best trading and overall macroeconomic and finance community that exists in the market right now. I'll see you guys in there, but until then, I'll see you in the next one. Peace.